What's up, y'all? My name is Tyler Devereaux. I'm the CEO, managing partner of MF Capital Partners. Welcome. We are an investment company that buys big apartment buildings. So big multifamily apartment buildings across the nation with specific characteristics to make sure that we protect investor capital, maximize returns on investor capital. We have an army of people out there that source deals. We have an army of people that we take down deals with, people like you. And we would love to take down deals with you, not just people like you, but you. We would love to give you any education, knowledge that you need to take any more action that you need to take when it comes to placing your money. We own a lot of real estate, well over 3,500 units, over 400 million in assets. We've distributed over 120 million to investors with equity on these properties that we've created. Go ahead and take a listen and hear what some of our investors had to say about the opportunity to invest in our last fund as well.
I was so excited to see this opportunity. The group of people in front of us just were so sincere. And I just felt like from the minute I met Tyler that you could trust these people. And it's not easy to give up that kind of money. And that's how confident I felt. I come from a very, we didn't grow up with much money, and the money we did have, we hung on to. So it was just a very odd thing. The first thing I got involved with was Prosper Fairways apartment. Huge return, short term, but very, very nice return. Then I invested my IRA in the Acai fund, and I'm looking at also going into the Aloha fund. I love being involved with people that I just can take my money and say, I know you're gonna do right by me.
I've worked my whole life in construction, so I know what hard work's all about. And I just want to see my money working for me and me not having to work for it every step of the way. Get a little more freedom, more time with my family, because I have a son and a wife that I want to spend a lot of time with. Getting that first deal in there with the Aloha Fund and getting invested with that was massive, because taking that first step is the biggest one, I think. And then after that, you kind of start to build momentum and just roll with it.
So far, it's been great. I liked who Multifamily Capital was, and I decided to jump in right then and there. And then when the Acai fund was out, I jumped into that deal. Dealing with and working with Tasha and Melissa has been incredible. They are just the epitome of customer service and client service, and just great people.
The character speaks for themselves. So anytime we've had a question, reach out anytime, get a call back, nothing but direct, people focused, the investor focused, not money first.
Once the Acai fund closed and they opened up the Aloha, I jumped in immediately. The rate of return is really good on your cash on cash. And they don't make any promises. They always say, approximates. But on a couple of my deals right now, I've been getting my returns every quarter, and it's been great. I have a feeling of just I could sleep at night that I know they got it taken care of. And they've been very good about keeping you in the loop on everything that's going on, the properties they're buying, and especially these big, large funds, because they're constantly buying properties, filling the fund up. Multifamily is where it's at. You could do well in it.
Listen, y'all, we appreciate you being here. We appreciate you exploring investing with MF Capital Partners, and we cannot wait to get to know you more and grow our wealth with you together. Aloha.
Welcome, everybody. Super excited to be here with y'all for this webinar. I'm very excited to be joined here with Ryan Woolley today. Like I said, we're so excited to have everybody here. Just a couple quick housekeeping items before we get started. As you can see, we do have the chat open. Please use the chat if you have a question or if something pops up that you need answered. Please use that chat box for us to be able to communicate back and forth with you. If we see a question come up in there, chances are we can have Ryan address it and answer it. So if you have a question, please feel free to throw it in that chat box. Also, we have a Q&A section as well. If you're on your computer on this Zoom call, you can use that Q&A section to ask us questions there, and we can respond to you via that Q&A section as well. To welcome everybody to the call, there's some quick housekeeping items, some quick introduction to myself. My name is Jackson Campbell. Very excited to be here with y'all. I'll be hosting and moderating the call today with Ryan Woolley. He's actually in the car headed to go do some things. I'll let him explain that a little bit better. But Ryan Woolley, managing member, co-founder of the Multifamily Mindset, managing member of Multifamily Capital Partners, and an all-around fantastic individual. The role that Ryan plays primarily, that he has primarily played in the past, is underwriting. Ryan knows the numbers of these deals like nobody's business. He understands the numbers that go behind these deals. And not only does he understand them, he is very good at explaining them and putting a story behind those numbers, so they're very understandable and very easy to comprehend, and very easy to understand why they are so important. We're very grateful to have Ryan on the team. His service, his love for the people that we serve and the investors that we serve, it definitely shines through in everything that he does. So we're very excited and grateful to have him on today. But I will go ahead and turn the time over to you, Ryan. So excited to have you on. Thank you for joining. I know you're in the car headed somewhere, but thank you for being here, my man.
Dude, it's great to be on here. First of all, it's interesting. Like Jackson said, I'm actually heading down to a networking event, right? A real estate networking event. Like you said, and we're always out there trying to find information to better ourselves, right? To operate these deals better. Now, I know the title of today's webinar was Imposter Syndrome, right? How to know if your operator is duping you, right? And Jackson, I know you do a podcast with Tyler. Maybe we can have this be very interactive between you and I, right?
Yeah.
In fact, I would love it in the chat too, to know how many of you guys have invested in multifamily before, and how many deals have you invested in? Go ahead and throw it in the chat. Is this the first time? Have you invested before? And if you've invested, how many deals have you invested in? Awesome. We have some beginners first. It's like 3 deals. Awesome. Several deals, 5 deals.
5,
yeah.
0. Yeah.
Awesome.
Of different.
That's great. That's great. So for those of you first time, guess what? We're going to go over some things you can look for. For those of you who've been involved for a while, guess what? I've been investing since, Jackson was a 20. Now I'm old. Okay, I'm 45. It's easier to say it. 24 years. I think of the year I got involved, right? It's been a long, long time. It's since the early 2000s. And so what's interesting is in today's market, right? We're in a completely different market today than we were 3-4 years ago, right? And so the important thing is obviously today we have an opportunity for you, right? We have the Aloha Fund. We have a couple of deals we're actually going to talk about that are in the Aloha Fund. How do we look at those deals? How do we even, what are the items we look for? What are the financial items? What are the physical items of the property we look at? But more importantly, what questions should you ask us, right? If you're going to invest with us, if you're considering other opportunities, what are some ways that other operators, like the title says, Jackson, dupe you, right? And not giving you all the information, right? So I want to be able to go over a couple of these things in passive investments. Let me ask this though. What are some of the questions that you guys ask or would like to ask to operators on deals that you look at? Let's maybe start there. Go ahead and throw that into the chat. Ronnie, good to see you on here. Ronnie's in the Aloha Fund. Awesome. I'm excited to talk to you, Ronnie, right now about the Aloha Fund and how it's operating, how it's running.
A lot of people thrown in here in the chat. Yes, a lot of people thrown in here in the chat. What's the track record? How many deals have you done? What have you personally invested into? Those are some of the questions that they would ask operators.
Awesome. So Jackson's definitely helping me with the chat today. Thank you, Jackson.
Of course.
If we have my whole setup at home, it's great, right? So it's interesting, just like due diligence, we got to ebb and flow, right? We got to ebb and flow just like this drive, right? Didn't make it in time down to the event. And you got to ebb and flow, right? You got to, when things come up, you've got to be able to address them. What are the solutions to it? So some of the questions or some of the statements were, how many deals have you done? Well, the amazing thing with us, MF Capital Partners, Jackson, we've done 28 deals. 28 deals. 13 of those we've exited. We've gone full cycle. It's a question someone put up there, right? How many deals have you exited, right? When you say track record, what are your returns? Okay, we're north of 25%. Actually, some of you who've been on the webinar will know that this is a number I actually hate, right? Track record is indicative of what your returns will be. But our track record is 38% annual rate of return. Now, is that great? Is it good?
Very
Absolutely.
good.
Absolutely. Is it expected in today's market? Absolutely not. Very interesting, right? When people tell you, hey, you're going to get 25% annual rate of return on a deal, right? This leads into one of our first ones. You know, the reality is this, man, we passively invest in other deals, which is what someone else did. We passively invest in our deals, right? We're investing in, alongside of you guys, right? You know, in our last fund, we did close to $1 million. On this one, we have a little over $500,000 in it. And so one of the reasons I hate it is we truly believe in buying cycles, right? As you hold a property for 3 to 5 years, it's the typical hold time for us in a deal, right? We want to get into mismanaged properties and we want to turn those. We want to sell those, right? We want to have our money work for us. A lot of people say, hey, listen, cash flow is amazing, right? Why not just hold the deal and get more cash flow? Well, the reality, just like one of the deals I'm going to talk about here in a minute, is, you know, it was $300 under market rent. I want you to think about the equity there, right? How much equity, if you're $300 under market rent, could you get? You know, well, we have another deal that we got for $4 million under its purchase price in today's market. But one of the amazing things is this, as I've passively invested and I've looked at other people's deals, it's amazing. I would see 23%, 24%, 25% annual rate of return. For us on our funds, we'll tell you it's anywhere from 16 to 20%. Really, in today's market, 16 to 18% is pretty good. In fact, I want to ask you, what are the returns that you guys are getting today? Whether that's in stocks, crypto, we've had investors, single family home rentals. What are the returns that you're getting today? I'll throw it in the chat. Just got on the phone with an investor. It was 5% is what they're getting on their stocks, right? They had to get out of it. What returns are you seeing today? Jackson, you still there?
Yeah, I'm still here. 12. We're seeing some 12%. Someone said 12% on mortgage notes. Just waiting for some responses to come in. But yeah, Ryan, you mentioned one that we heard the other day, 5% on some stocks. 5%,
20%, 5% CDs. You're right.
Yeah,
and
7%.
What's interesting, Jackson, in that is, you know, in today's market in real estate, one of the things that MF Capital Partners, we want to under-promise, over-deliver, always, always. And so, you know, really, if I tell you 16 to 18%, is that a great return today? Absolutely. We just did a webinar not too long ago, and everyone said, "Man, sign me up, tell me about it. I want to invest in the fund." And we'll talk about that here in a second. But the reality is this: when I see an operator that puts in 23, 24%, I start asking myself, what's the term, or what is the whole time of the fund? Hey, one of the best things you do is say, hey, listen, let me see the underwriting, right? How did you do your underwriting? Okay, give me your pro formas and let me take a look at those. Okay, one of the easiest ways to dupe, we're going to use that word a lot today, Jackson, dupe. Okay, is that an 80s word? That might be an 80s word.
I like it.
I have it in the late 80s.
I like it. It's a good word for sure.
Dupe is a common word. Dupe, okay. So, you know, the reality is this, right? As you get duped, right? The thing is, they may tell you, hey, the whole time's 3 to 5 years. Underwriting, they've done over a 10-year period, right? One of the best questions you can ask is, when you did your underwriting, how many years was your underwriting at? Think about pay down your principal, right? You, as you improve your property, as you raise your rent, as that market rent continue to increase, that organic growth, plus the forced appreciation, right? That cash flow is going to continue to go up. So that cash flow at acquisition could be 6%, go to 7%, 8%. It could get up to 14, 15, 16% in cash on cash, right? That's great. That's phenomenal. But the reality is, if I'm only holding for 3 to 5 years, right, that's going to mislead you. That's going to completely mislead you. So here's the thing. One of the things for us, man, we want to under promise, over deliver. We like to identify with our investors, what are they currently getting right now? Does it make it sense for you to invest with us, right? We truly care about one of the biggest things here is investor experience. Jack don't say that. One of the things that we talk about is investor experience. I've had investors where, listen, they're looking for cash flow, and we've gotten into deals or more equity plays. You know, we truly want to understand your investment criteria. So that's the other thing. What are operators doing, right? What are they doing to understand you as an investor? Okay, what are they doing? In fact, Tyler Devereaux, my business partner, other managing partner here, right? MF Capital Partners said the other day, right? Do you need money? Hey, Jackson, you remember him doing this, right? Do you need to get money from people, right? And the reality is this, if I can understand you better as an investor and what your criteria is and what your need is, right? And I can be transparent with you, the more likely you are you can invest with us. So that's why I tell you, when we say our track record is 38%, man, we sold at the height of the market. In 2021, got that. That's exactly what you have operators go out there. What did you have? Especially in today's market, how for returns, right? How frequently are you paying those?
Ryan, you're cutting in and out a little bit there, brother. Can you re-ask that last question?
Is that
Yeah, if you'll actually turn off your video, we'll still be able to hear your audio a lot clearer. Now go ahead. No, we're losing you. Yeah, we can't hear you. Okay, no worries. Ryan, if you're able to tune back
in. Is that better, Jackson?
Oh, there we are. We got you. Are you there? If not, no worries. No problem. Ryan, it looks like you're cutting in and out. No worries. We're grateful for the time that we got with you. We're very grateful. If you are able to tune back in, definitely interrupt me and jump back in. But I'm very grateful for Ryan and very grateful for his opportunity, for the opportunity that we had to have him on for a little bit. He's a very busy guy and he's got to go where he's got to go and do the things that he's got to do. Luckily, I'm on, so I can go over.
Jackson,
I can
is that
go
better?
Oh, there we are. Yes, Ryan, there you are. Go ahead, my man.
Awesome. And you may have to take over that, and I totally get that, and I apologize. I'll do don't go over it.
You know what, Ryan?
Are you pay out preferred returns?
Ryan, you're so choppy, brother. I don't know if it's gonna help when we just lost you. We just lost Ryan. He's no longer on the call, so no worries. I will take it from here. No worries at all. I'm very excited for the opportunity to be able to walk y'all through some of this. Still have the chat over here, so we'll still be able to use that. Please feel free to throw your questions in there as we roll through things here. So I'm going to share my screen and kind of go back through some of these things that Ryan started to go through. But one of the things that Ryan kept going through was our track record, right? We have our track record, this annual rate of return. We were able to sell a large portfolio at the height of the market that gave us this massive return. Our projected is 21.8%. We've been able to hit 38%, which is very good, right? Ryan's always very, very hesitant when, not necessarily hesitant, but we always want to make sure we explain that. Like he was saying, we under promise, over deliver is what he says. I always get that mixed up, right? So we always want to make sure that we're fulfilling on even more than what we're telling our investors, and that's what we've been able to do through these deals and how we go about doing these deals. Another thing, like Ryan, also we kind of are talking about the due diligence as a passive investor, right? Like, what do you want to look into as a passive investor? What is it that you want to look for in your operators? A lot of y'all said track record, which is a huge part of it as well, for sure. And then somebody said in here as well, a great question that came in: are there deals you failed to get expected returns, and how was it? I wish Ryan was on here to speak a little bit more on that, but there was one occasion where us on our side didn't get our returns that we wanted to get, but we sacrificed our returns to make sure our investors got the returns that they were supposed to get. So the investors continued to go forward and got the returns that they were supposed to get. So there is things that happen, but never has something happened to the extent where the investors didn't get the return that they were expecting to get. Awesome. Well, let's continue on here. If there's any other questions, please feel free to throw them into the chat. But let's see here. I have Jay Carter on with me right now. He's currently acting as investor relations manager. He's on as well. So Jay, if you could jump in here with me, my man, I would appreciate that a ton, just so we can have a little bit of back and forth and somebody to kind of chop these things up with. Jay, what else do we want to cover on today's call?
What's up, everybody? My name is Jay. Thank you guys so much for hopping on. I know Ryan has some technical difficulties, but a lot of the things that Ryan speaks about when we look at properties is what is our due diligence process as passive investors. One of the things that I know you guys were concerned about and asking questions on is, you know, from an operator's experience, one of the things we look at when we passively invest is how many properties did an actual investment company exit, right? So one of the things that we look at is giving projections on what we feel the returns can be. But one of the things you want to understand is how many properties we've actually exited. And Jackson, correct me if I'm wrong, man, I think we've exited around 11 full cycle properties.
Yeah.
Yeah, so what I want to know too is currently right now, what you guys are currently doing to be able to vet operators. What are some of the questions that you guys are currently asking when looking at opportunities? And we can kind of go from there and answer some of those questions directly.
There's one of these questions that came in from Jen. Jen, it's a good question. The track record is based on average of how many years or how many deals of the performance? Do you have a breakdown per deal? Do you have a minimum, maximum, and median performance number? We have that breakdown for sure. I don't have it on the top of mind. I apologize. I don't have those things right with me for sure. We can get you those things though. We definitely have those for sure. But yeah, what are some other questions that y'all are getting? Oh, here's one, Jay. Don't know if you can address this one. Oh, you can for sure. Jay, what markets are we looking into right now?
Right now, so we're looking at, we have a property that we're underwriting currently. We're looking at Warner Robins. We just purchased a property in called Arden Place in Warner Robins, Georgia. We're actually working with the broker who has a similar property near that area. So that's what we're currently looking at right now. And we're also partnering with some of our students who are looking at other markets that fit our criteria, depending on, you know, if they have value add opportunities.
Awesome.
Where can I see the deals that you guys are offering? So we have an investment portal, and let me put that in the chat that you guys can take a look at all the opportunities that we're currently looking at. Right now, we're doing an MF Aloha Fund 2. We're looking to purchase anywhere between 3 to 5 properties for that fund. And right now we have 2. We have Orlando Sky and Arden's Place that we've been able to acquire to date. But let me put this in the chat real quick.
Yes, Jay will throw in there a link into the chat that everybody can click on and go into our portal, see our active offerings, and also see some of those other numbers that y'all were asking for when it comes to the specifics per deal and our track record there. You can see that all via the portal as well. Jay, thank you for throwing that in the chat. If y'all can click on that, fill out that information, you'll be able to see those things as well. Jay, if you don't mind, do you mind just kind of reviewing Orlando Sky with us here? We can go into this together. But Orlando Sky is probably one of the best examples that we can use when trying to vet an operator, and the story behind Orlando Sky and what's currently happening there, and how beneficial that deal is, and how profitable that deal is going to be, is because of experienced operators, specifically Ryan. I wish Ryan didn't fall off this call so we could talk about this a little bit more and we could dive into it with him. But Orlando Sky.
Yeah,
Jay,
Orlando Sky.
So go ahead, give us a quick overview. Maybe I'll add in some things here for sure.
Yeah, for sure. So Orlando Sky, first acquisition in Aloha Fund. I'm personally investing in it, and I'm glad I did. This is a property that we purchased for $300 a door, $300 under market rent. And we're already pushing those rents up now. We've only owned the property for about 6 to 7 months, and we're ahead of our schedule on being able to push rents. So this is a really great investment. I'm super excited for the returns. And right now we haven't even done any CapEx, and we've already increased the rents by 25%. So super excited for this investment. It's the first. It's right here in our hometown of Orlando where we have the office. So it's a great acquisition for one of the first deals we got in the fund. So investing in the fund, you would have a percentage ownership into this property. And we purchased this property in December of last year.
Yes, no, it's an awesome deal. And the craziest part about this deal is that it almost didn't go through. It almost didn't go through because as we were doing this is a fantastic example of operations and experienced operators. As we were doing that deal and as we were doing due diligence on that deal, we wrapped it up it was under LOI. We were doing some due diligence in the PSA phase. And what had happened is we had gotten some information from the property managers about some leaks, some leaks that kept continuing to happen. So as we kind of looked into those orders, those service orders, we come to find out upon further examinations that there's some polybutylene piping in this apartment building. Now, what that typically means for us is that's a deal killer. Oh, you're not allowed to have those anymore. It makes insurance prices crazy high. So if usually when buildings have polybutylene, it's a deal killer. We'll usually walk away from them at that point because of how expensive it is to fix that. But because we noticed it in the PSA phase, we were able to negotiate a $500,000 credit at closing for us to be able to fix the polybutylene and not mess with the numbers of the returns that our investors were going to get whatsoever, and still, like Jay mentioned, still be able to push rents and still be able to move forward with the business plan while also enhancing the living spaces for these people, for these tenants that we're so lucky to serve. But also
we got a question too. It says, if you already
yeah.
purchased a guy, how does the ownership work for new investors? So basically what happens is if you invest with us into the fund and do Aloha Fund, you get ownership of all of the properties that we acquire in the fund. So specifically, we already purchased Orlando Sky, but you would also get ownership into that. There's been notable about 13% EGI growth and about a 15.5% NOI growth compared to Q1 with this property already. And basically, we've achieved these results by focusing on quick move-ins and strategic rent increases. Like I mentioned, we haven't done any renovations yet to this property. And the average renewal increase has been steady around 20%. And we've been retaining about 75% of expiring leases. As of last month, we're on track to meet our numbers, exceeding our 1 year of underwriting that we wrote up for it. And we're going to continue to implement value add strategies, which is where we really get that growth into the property. So by investing now into it, you get to have that growth as we start increasing the NOI on the properties. So whether you invest in the beginning or you invest now, there's still a big value add opportunity to get into that equity growth of Orlando Sky.
Yeah, so great question, John. What value add would you be adding to Orlando Sky? A lot of interior units need to be renovated and upgraded there. So that's a lot of the value add that we're doing there is there's a lot of curb appeal that needs to be done on the property as well, but also a lot of internal unit upgrades as well. As far as bedrooms per unit, I think do you remember that, Jay? The bedroom per unit there for Orlando Sky.
The unit mix. Yeah, there's a unit mix.
Yeah,
it's between 1 and 2 bedrooms mainly.
Yeah,
but it's a good unit mix. And then if you want to move on, we just
yeah.
This is another deal. We just purchased this deal. We closed on it, finalized it last month. Arden's Place, beautiful garden style apartment building in Warner Robins, Georgia. Like I said, we're still looking at that market very heavily. I believe we closed on it June 20th, which is our first acquisition into the third quarter. And this is in Warner Robins, Georgia. We don't have any specific data or our numbers on it yet because we just acquired it. But this is one that Ryan mentioned that we got around under the current market rent as well. So this is a 114 unit deal, Warner Robins, Georgia, and we're projecting around 20% ARR for this property.
Yeah, no, this is a fantastic deal in a fantastic market. It's definitely a gem, a diamond in the rough that we found there that is gonna produce other things as well in that market as that market is.
We got questions.
Question that came in. Yeah, go
Yeah,
ahead.
if you're in Orlando, Grace, we here are in Ocoee, Florida. So if you are in the area, please feel free to stop by. I'll have our team reach out to you with our address after this webinar. Another question is, does depreciation pass down through investing through the fund? Yes, depreciation does pass down, and it's like based on the percentage of your investment throughout the fund. So each of these acquisitions are in the fund, so it'll be your percentage of ownership in the fund. That's the percentage of depreciation that you'll receive from the investment.
Robert, great. I'll take this next one, Jay. Great question. When you go into a new market, do you secure new management or retain current management? It really just depends on the property and how it's currently being run. If the property is being run with the current management and it's going well, and we're able to come in and implement a new business plan easily with the current management current management company, we'll do that. But oftentimes we will come in and bring in a new management company that we have great relationships.
Yeah, and we do it by who's performing. We have
exactly. It goes off performance. Yeah, exactly.
We have a property, Aspen, one of our properties in our last fund, and we just recently transitioned into another property management company that's performed well on Orlando Sky because they've done such a great job. We went ahead and transitioned it to that property so they can better manage the property and address some of the same issues that we had concerns with at Orlando Sky. It's the same things they're fixing over there and just pushing rent. So we do work with different property management companies, but we're starting to vet the best operators for the property, and we're starting to use those for more of our properties.
Awesome. A great question right here, Floretta. I believe, do you have information about the location? I believe you're talking about Arden Place.
This is Warner Robins.
Yeah,
Georgia.
Jay, do you want to speak on that?
Yeah, on the location.
Yeah. What about that market makes it so great?
Yeah, so Warner Robins, the economy is driven a lot by there's an Air Force base near the actual city. The military has about 24,000 employees there, making it one of the region's top employers by far. And I know it's only about roughly 35% of the employment base. So there is opportunity. There's growth that's coming there. I think there's plans that we saw that they have in place to bring educational and health services. A big hospital is coming to the sector to be able to get a big employment boost there. And I think one of the things that we're excited about is just the amount of growth that's happening in the area. There's another, I believe it's a manufacturing plant that's investing. I think it's called Purdue Farms or something like that. That's projected to bring about 2,500 jobs to the area and investing around $450 million into the area, making, Warner Robins, that market, one of the fastest growing markets in Georgia. And we did comps, and a lot of the comps in the area have a strong 95 to 97% average occupancy. So it was a great opportunity. And like I said, we got this property under market rent as well. I think we got it either $200,000 or $300,000 less per door than what the market was asking for. I believe this owner was going through foreclosure and was going to lose the property. So we got in at a really great time and got it at a great value that we can now, instant equity. If you did the math per door, I think it's about $3 million in instant equity that we got with this deal.
Yeah, it was a fantastic deal for us to find. This is a great question. We're going to wrap it up with this question. We want to try to keep these to about a half an hour. So we're going to wrap it up with this question for you, Jay, and then I can walk everybody through next steps here if they have any additional questions that they want answered as well. But yeah, sure. Great question here, Eric. What's the total outstanding raise for the Aloha Fund 2? And will you continue to seek investors until the raise is reached? So if you could just kind of give an update there on that, I think that would help them.
Yeah, so I think we're about 75% subscribed now. So we're looking at about $7 million more to place into the Aloha Fund before we close it out. Looking to purchase another property this quarter and then finalize the fund Q4. So we do have space for a little bit more of investors. But I would, like I mentioned, the actual key to this fund is getting in before the equity increases, before we do those value add to get the most out of your investment. That's the right time to invest. You'll still get the actual benefits of the investing at whatever time you invest with us, but to get the biggest returns on equity is right before we do those value adds.
Awesome. Great questions coming in here. I wish we had time to cover them. Jay, if you don't mind throwing a link in the chat so these people can schedule a call to get these questions answered. Definitely want them to.
Yeah, definitely.
Answered. So please throw that link in the chat if you don't mind.
Yeah, of course. So I'm going to put a link in the chat right now. This is to create an investor profile. So if you don't have an investor profile with us, definitely go and make one. You're going to be able to see all of the properties that we're vetting, that we're looking to invest into. You're going to see all of our documentation, our subscription documents, everything necessary to go ahead and invest with us. And at the top, once you create an investment profile, you'll be able to schedule a call with our team. There'll be a big button that says schedule a call. And please feel free if you guys have any more questions. I know Ryan definitely had some information that he's sharing with us on the properties that we're going after now that we're submitting LOIs on. But Orlando Sky, Arden's Place are big wins for the fund already. So I'm excited to acquire more deals this year and be able to work with you guys closely. So schedule a call with our team. We'll be happy to answer more specific questions that you guys may have.
Yes, definitely. Jay, thank you so much for the pivot here that we needed to make. Everybody, we're so grateful for everybody that's on this call. I know Ryan is probably disappointed in the connection and that he wasn't able to jump on and be able to finish out this call with y'all. We will, I do want to reschedule this call. Jay, I don't know if we can make a note to get with our marketing team and our team here to make sure that everybody on this call can be re-invited to another one with Ryan, so they can be on with Ryan, get their questions answered. And I know because Ryan would love to spend that time with these individuals and answer those questions as well. So let's make sure we have that happen as well. But like Jay said, Jay, thank you so much for jumping on here kind of last second for us to kind of stumble through this and get this information across to these wonderful individuals that decided to jump on with us. But one last time here, jump on, create your investor portal via that link that Jay threw in the chat there. Jump on there, create your investor portal, and you can see all the information about everything that Multifamily Capital Partners has done, everything that we've got coming up, and really help you make a better decision on if this is the fund that you want to invest your hard-earned capital into. We're grateful for y'all. Yes, go ahead.
So distributions are quarterly, and they're usually 3 months after your investment, or 3 months, I'm sorry, 3 quarters. So we can stabilize the property. So for example, we just acquired these Arden Place. So if you create an investment now, it's usually 3 quarters after you invest that you'll get your first distribution.
Awesome. That is right. That is correct. Appreciate you, Jay. Thank you so much.
Thank you, brother.
Everybody, thank you so much for being on. Please reach out if there's any extra additional questions that we can answer for y'all. We appreciate y'all. Have a great rest of your day and take care.
See you guys.